in 2017, your net income was at 7.8 billion euros, despite a challenging environment for markets.
Yes, indeed. And as you see, for us, it's solid results on the back also of an economic environment in Europe, which is doing well. And so that's why we are off to a good start. Let's not forget 2017, we also started our transformation plan, ramping up to 2020. As I said, we're off to a good start. If on top of that, the economic outlooks crystallize going forward, then we are expecting to beat our target of a 10% ROE in 2020.
So you see an upside to your 2020 targets. You're going faster than expected?
Well, the thing is, we are doing changes both in the customer journey, on the digitalization, on the cost efficiency, which are off, as I said, to a very good start. We see that there is an economic environment which is also picking up growth. We see all this. So if this would indeed crystallize, we are expecting to beat the target.
Which target precisely?
We're expecting to beat the target of 10% ROE.
What about the targets for revenue growth in retail or markets activities?
Yeah. Now, overall, these are growth evolutions that we say, and we believe that intrinsically that evolution will roughly stay as it is. So we believe that we should be very well in line.
Do you think that the increasing volatility that we have seen since the beginning of 2018 will actually improve your CIB business?
Let's be fair, if you go back in 2017, CIB, which for us is a diversified business with corporate banking, security services and global markets, did basically well. In global markets, we are focusing, of course, on always assisting our clients. And so, yes, that demand goes a bit with how the volatility is in the market. So the second half of 2017 was a bit lackluster on that domain. So we'll see how it evolves in the first quarter of 2018.
It was very challenging, as you're mentioning. Your fixed income down 27% in the fourth quarter. So this could be better in 2018.
Yeah, as I said, for us, our CIB for corporate and institutional banking is a diversified business. So it has corporate banking, security services, and in global markets, it has fixed income and in equities. And so overall, the combination has done well and has resisted well in the turmoil of the second half of the year.
So where are you optimistic then, if it's not in the volatility market of the markets? Is this what makes you optimistic for 2018?
Overall, if you look at the economic evolutions, you see a pickup in demand for loans, a pickup in demand for services. That is really what you see. On top of that, we are digitalizing well. We are changing and adapting the customer journey to accompany all those changes. So that is why we believe that we're off to a good start.
So in terms of French retail, you're seeing a strong rebound in outstanding loans, up 8% in 2017. Are you seeing a return to growth faster than expected for the French retail?
Now, if you look at the French retail or domestic markets in general, you do see a pickup when you look at volumes, when you look at fees and all of that. However, we still have a low interest rate environment, so that weighs a bit on the top line. However, the low interest rate environment also makes that the cost of risk is lower than what you expect. So that is why overall domestic markets, the bottom line, is up 5% in 2017.
Is there a Macron effect?
As we said, there is an evolution that we see. And with respect to him, he has made a plan and announced several things, and he's executing them as it goes.
So it's not only due to the recovery in general, but it's also due to the impact of reforms that we are seeing in France that are starting to bear fruits.
Overall, I let you be the judge of that. But what we do see is since the beginning of 2017, we see a pickup in the economy, as I said, within the demand. And that is what we saw over the whole year.
On March 4, we got the elections in Italy. BNP Paribas has got a big unit, BNL. Do you see any risk there? Are you reducing some exposure in Italy?
No, in Italy, over the last couple of years, we have repositioned ourselves to be really focused on the individual clients or on the export-oriented corporates. But that's basically behind us. So we are there to accompany our Italian clients in their economy.
But some hedge funds are reducing their risk appetite in Italy.
Yeah, for what we can say, as I said, we with BNL, we are focused on specific clients that we want to accompany and that we will accompany as we've always done.
You've been a pioneer in blockchain, but are are you allocating some resources to cryptocurrencies?
So when it comes to us for using in the cryptocurrencies, we basically, for the moment, we're staying away from that because it's not a regulated environment. And as I told you last time, cryptocurrencies, to use that for security is not necessarily how we see it. What we, of course, using are blockchain, which is underlying the cryptocurrencies, and that is what we are deploying in several of our activities.
We've seen Bitcoin just dropping below $7,000. What's your reaction?
No reaction.
Are you staying away from Bitcoin?
That's what we said. Completely? We're not acting in Bitcoin, and so that we're not acting in cryptocurrencies in general.
But are you not surprised by this volatility?
No, as I said, we made a decision of saying in the non-regulated environment, we basically use the underlying drivers like blockchain, but that's basically where we stop.
So you are surprised or you're not surprised by this drop below $7,000?
I'm just saying we are, for us, what we are using is blockchain, and there's nothing more I can say about that.
Let's go back for one moment to your dividend. Dividend, 50% payout at 3.02 euros. So you're quite generous with your shareholders. Does that mean that you're going to just stay with your targets, 50% payout, or is a share buyback, like UBS, for example, something on the table?
Listen, we have for the moment a very strong equilibrium. So from the earnings we make on a given year, there's 50% that goes into dividend, and the remaining 50% we basically use it to cover the growth that we accompany our clients in. And as we said, we are seeing a pickup in growth and loan demand, so therefore we have to cover that with capital, and so that basically is a very good equilibrium for us. So we're happy to pay dividend and happy to accompany our clients.
So no share buyback on the table at the moment?
At the moment, we see an equilibrium. As I said, 50% of earnings go into dividend and the other 50% accompany the growth of the business.
Do you see bad loan provisions increasing?
No, if you look at the total year 2017, we basically have a lower cost of risk level than we had the year before. And as I said, that is not to be surprising. I mean, if you have a low interest rate environment, it's logical that also the cost of risk is at a low level. So from that point of view, we're quite confident.
But when we look at your CIB cost of risk, it was 264 million euros. Is that due to some specific files? Can you tell us a bit more what's beyond this?
No, I cannot talk about specific files, but as I said, overall, over the whole year, our cost of risk is lower than we had the year before. Of course, you can have quarters which are a bit different on specific files, but that's it.
You're talking about gaining market share in the CIB business. Can you be more precise on what this is going to mean in 2018?
Oh, no, what we continue to do, if you look at, for example, we want to grow our corporate and institutional clients. For example, in 2017, we've added 125 corporate client groups with whom we service. And so this is a process that we will continue year after year. And as I said, we focus more also on areas like the UK, like Scandinavia, like Germany, and that is what we will continue to do.
So do you see any appetite from BNP for more M&A in 2018?
No, as I said, for us, it's a little bit of an equilibrium. If there is a bolt-on, so a small acquisition that turns out that is really complementary with what we do, the price is right, then these things can happen, but that's basically it.
So nothing major?
No, as I said, it's bolt-on acquisitions. It's something which is small, which is complementary, and that's it.